Yeah, good morning, everyone. We saw yesterday on Friday some cool off in the tension between the Israel and Iran, and as such, we saw some improvement in the market on the Friday itself. The impact of the same is now visible in US futures as well, and also the Asian market are also indicating that some geopolitical tensions, which was aggravated on Friday, is cooling off. So, as such, we are seeing some positive trend in the international market. Uh, Same thing is also likely to be visible in India as well. We are likely to see some positive gain, and quite possible that gain can continue during the day. Apart from that, commodities also are showing some positive trend wherein oil has come off substantially. Uh, the Brent is now at around $86. On Friday in the morning hour, it went up to 91, but thereafter it started cooling off, and during the day it cooled off. And today also it is at lower at around $86. Other commodities are more of a flattish or seeing some positive trend. Dollar index is not yet coming off, and also the bond yield are continue to hold up, indicating that the concern about in higher inflation in the US continue, and that will keep the bond yield at a higher level. Now request technical team to take up from here.
Thank you, sir. Very good morning, all of you. We have seen a strong positive up move in Friday's trading session in Nifty, where it had opened gap down and from taking the support of its 100-day moving average, which was around 21,750, 770 odd levels. It has taken it has shown a good bounce back recovery in Friday's trading session. And taking the cues from the global market, we're expecting a gap up and a positive opening for today's trading session, whereas the upside resistance for Nifty is at 22,240, followed by 22,330. If that is broken, then 22,400 levels can also be seen. Whereas the downside strong support is at 22,000, which is psychological support zone as well, followed by 21,900. Talking about Bank Nifty has shown a similar move. It has given a breakout of its two of its moving average, which is 150-day moving average in the Friday trading session only. And it has shown a good recovery at the lower levels. For today, the immediate resistance for Bank Nifty is currently placed at 48,000 levels. If that is broken, then we can see a rally up to 48,370 to 48,600. Whereas if we witness some profit booking from the higher level, then the support lies at 47,400, followed by 47,150. Talking about Fin Nifty, it has closed around 21,200 levels. The upside resistance is at 21,370, followed by 21,540. Whereas the downside support for this index lies at 20,900 and 20,600. Talking about stocks, we feel mid-cap stocks can show some good rally in today's trading session, where Navkar Corp is looking good at current levels, can be bought for a target of 115 by keeping a strict stop loss of 104. Again, Sumi Chemical is looking good at current levels, can be bought for a target of 430 by keeping a strict stop loss of 396. These two stocks we have recommended as well. So that's all from my side. I request the derivatives team to take the call forward.
Yeah, thank you, Ayush. On the derivative front, the overall data has turned bullish. Importantly, on Friday, 22,000 levels was tested. We opened quite below the 22,000 levels, but the 22,000 put continued to remain steady. It always had the highest open interest built up for puts, and that was retested. So support has been retested. There is likelihood that some more buying can come in now going forward. Importantly, we are not seeing much call built up around and above that 22,000 levels. So the next highest open interest built up is around the 22,500 levels. So there is likelihood that Nifty can retest this level, and probably even higher, can go even higher from here. The PCR, VIX, and open interest are at comfortable levels. So nothing really to worry at this point of time. The VIX is likely to move up, as I said, in the next few days. So there is likelihood of the volatility that we are seeing now in the last few days that can continue in the next few days as well, where sudden falls or sudden rise can come in. So that's how the VIX will go up. So keep strict stop losses for the same. From the stock specific front, metals is one sector which is doing very well, and it is likely to do very well going forward. A lot of shorts were covered in the last 3 4 months, and we are seeing good longs being built in most of the stocks. So this is one sector which can go up as a whole. So all the stocks look very good. So one can look to buy these stocks for a short term good returns. Yeah. So that's it from my side. Like to ask the fundamental team to take over, please.
Good morning. On the result side, HDFC Bank result is in line with expectation. Upon adjusting for normalized treasury income stake sale that they did in HDFC Credelia, one-time provisions and tax rates. Basically, strong deposit growth and expansion in margins were the key positives for this quarter. Balance sheet details we already know. Loan book grew by just 1.6% sequentially, but deposit growth was strong at 7.5% sequentially. Bank has made excess floating provision of 10,900 crore during the order due to the excess profits they got from the stake sale of HDFC Credelia. So they have utilized that one-time gain towards this floating provision. Adjusted for this, the credit cost came at 50 basis points, which is lower than expectations. NIM is likely to remain at stable at around current levels at 3.6 to 3.65 in the near term, and it is likely to expand in the medium term on the back of replacement of high cost bonds with deposits, and secondly also because of change in business mix towards retail. Bank has said that it will prioritize profitability over growth. And although despite this, it is confident that it will continue to gain market share. We expect a gradual re-rating to happen if the deposit growth is sustained in over next coming quarters. That's why we maintain a positive view from long-term perspective. Jio financial result was okay. Revenue, EBITDA and profits were flat sequentially. Company is in still hiring and strategizing mode. It is building up the infra for the 50-50 JV with BlackRock as well as for other segments. Stock is trading at trailing price to book of 1.7 times, which is reasonable, neither cheap nor expensive. We are positive from long-term perspective. Sterling and Wilson renewable energy result is marginally below expectation. However, market will focus more on what is the commentary of the company in today's call, whereby market will look at what happens to the Nigeria order, which had got affected last year, if that comes back on track, and if there is some additional expectation on the orders from the parent company Reliance, then that will be seen as positive. Revenue has witnessed good jump in the March quarter compared to December as well as last year. And also company has turned around at the profit level, although profit it was at just 1 crore, but it marks a sentimentally positive undertone as after 12 quarters of losses, this turnaround has happened. This was mainly attributable due to higher execution of domestic projects where gross margins are much higher, and also due to control over OPEX and reduction in debt, which resulted in reduced interest cost. Company has a strong order book and gives visibility of growth for next 4 to 6 quarters. Today's call will provide much more clarity. We are positive on the stock. Indian Renewable Energy and Development Agency result has improved on the back of subdued credit cost. Although disbursement and loan book growth was subdued, we believe that market will focus on a longer term growth potential. Profit before provisioning was up 40% year-on-year, 7% sequentially, and provision was much lower at just 9 crores against normal run rate of 40 to 50 crores over last few quarters. Asset quality also improved. GNPA came at 2.4% against 2.9% in December quarter. Similarly, net NPA also declined to 1%. From a near-term perspective, stock looks pricey, but if one were to focus on long-term, then we are positive. But we would suggest to accumulate this stock in corrections below 140, closer to 120 to 140 range from a long-term point of view. HDFC Asset Management result is okay. A strong AUM growth was marred by a decline in revenue yields. AUM grew by 11% sequentially against industry growth of 10%. So we've seen that HDFC has been able to gain market share over last 3 to 4 quarters. Although the market share gain has been restricted to just 10 odd basis points, but directionally it's positive. On the equity side, growth was much better at 22% sequentially against industry growth for equity at 14%. But revenue and EBITDA growth was restricted to just 5% sequentially due to intense competition and pressure on yields. So until the time the company continues to outperform the industry on AUM growth front, we will be positive on HDFC, and so one can look at accumulating the stock on declines. Thank you.
Good morning. Wipro reported its numbers post-market hours on Friday. The fourth quarter revenue growth declined 0.3% Q on Q, and that was expected. New CEO, Mr. Srini Pallia, has taken charge 2 weeks ago. He's a veteran and he's been with the company since 1992. Wipro has given the first quarter guidance for FY25, which is going to be a decline of 1.5% to a growth of 0.5% on a quarter-on-quarter for its IT services revenue. Stock is trading at 19.6 times FY25 expected earnings. That is around 30% discount to TCS, obviously citing lower revenues and margin performance. We are neutral to the stock. Secondly, Persistent reported its quarter 4 numbers yesterday, and the numbers were good and in line with expectations, wherein the dollar revenues moved 3.4% Q on Q quarter on quarter, and EBIT margins were flat at 14.5% Q on Q. During the call also in the morning, which was there, the management has said the demand environment for their business is same as it was 2-3 quarters ago. And for the margins also, they are quite positive that they'll improve over the next 3-4 quarters. So the stock is trading at a PE of 21 times FY25 earnings, and we remain positive over the long term. Thank you.
Good morning, all. Hindustan Zinc results has come, and the results are broadly in line with expectations. The revenue from operations came in at 7,549 crores, 3.3% Q-on-Q growth, and a degrowth of 11.3% year-on-year versus expectation of rupees 7,350 crores. EBITDA came at rupees 3,649 crores, 3.6% quarter-on-quarter growth, and a degrowth of 14.2% year-on-year versus expectation of rupees 3,631.9 crores. EBITDA margin came in at 48.3% versus expectation of 49.4%. Adjusted PAT came in at rupees 2,038 crores versus expectation of rupees 2,040.9 crores. The stock is trading at a PE of 17.6 times FY25 expected EPS. It recorded the phone call also came, and the company said that it has achieved record annual silver and metal production with strong cost resilience amidst lower zinc prices. And it has become the third largest silver producer globally with highest ever silver annual production. And it has also achieved highest ever quarterly refined metal production for Q4 FY24, up 6% sequentially. Revenue from operations during the quarter were this, and this was on account of better zinc volumes, which were partly offset by lower lead and silver volumes and lower metal prices. The revenue plunged 11% year-on-year on account of significantly lower zinc and lead prices and lower lead volume, partly offset by increased zinc and silver volumes, silver prices, and favorable exchange rates. Both mined metal and refined metal production in FY25 is expected to be higher than the last year, given the ramp-up of all major projects commissioned in the last year and better capacity utilization. Mined metal is expected to be between 1100 to 1125 KT and refined metal production in the range of 1075 to 1100 KT. FY25 saleable silver production is projected to be between 750 to 775 metric tons. Zinc roster production in FY25 is expected to be between $1,050 to $1,100 per metric ton. Project capex for the year is expected to be in the range of $270 to $325 million. And as far as prices are concerned, the company is saying that with expectation of interest rate cuts by the US in future and geopolitical tensions in the Middle East, the commodity prices are getting rallied up in April 2024, with silver touching its ever highest in INR terms. And global zinc demand is expected to recover with better investor sentiments and the recovering economies with expected interest rate cuts. Coupled with low metal stock, zinc prices are expected to rise. So given that, we think it is positive for the company. Thank you.
Yeah, that's all from me, from us, and I'll request the commodity team to take up from here.
Yes, sir. Thank you very much. Good morning, everyone. So today we have witnessed gold and silver prices correcting. So there could be some pullback. Gold it can again bounce back till 70 to 350, whereby again some selling pressure could be expected. On downside, it can test 72,000 to 71,800. Silver prices also breached the support of 80 to 700. There could be some pullback, but all in all, the profit taking is on the cards. So it can test uh, 81,500 to 81,000 on a downside. So selling around 80 to 700 is the recommended. And in metals, copper, one can initiate a buy around 843 and maintain a, 845 and maintain a stop loss of 840. On upside, it can test 850, 52. Zinc also, if prices are sustaining above 250, uh, 250, then we expect prices to test 252 on the upside. So maintain a stop loss of 248. Also, crude oil prices if sustains below 6,800, then we might see further correction till 6,720, 6,700 on downside. So the upside resistance is placed at 6,880 to 6,900. So watch out for that. And natural gas, there should be some consolidation from 138 to 150. So trading within this range is recommended. One can initiate a buy with a stop loss of 137. So that's it from me. I'll ask Utkarsh to take the call forward.
Thank you, sir. Very good morning, all of you. For today's trading session in USD we are expecting some profit taking from the higher levels. So in the range of 83.58 on the higher side and 83.33 on the lower end. So one can initiate short positions around 83.49 to 83.51 levels for the target of 83.33 and 83.25 levels. Thank you.